Welcome to the Deep Dive, your shortcut to getting smart on earnings. Today, we're jumping into Diebold Nixdorf's Q2 2025 numbers.
Yeah, and Diebold Nixdorf, they've been in this interesting transition phase, really trying to streamline things.
Yeah.
So Q2 was a key moment to see how that's actually playing out.
Definitely. We've gone through the call, the reports, all of it to pull out what really mattered and, what moved the needle for investors.
So this deep dive is all about understanding that trajectory and how the market reacted.
Okay, let's dive straight into the headline figures first.
Right.
So the reported GAAP EPS, that came in at $0.60, a little under expectations.
Slight miss there.
And non-GAAP was 94 cents, also just shy of the forecast.
Okay.
But, and this is the interesting part, the revenue was a clear beat, came in at $915.2 million. That was, well, quite a bit higher than consensus.
Exactly. And that's kind of the key here. Despite those EPS numbers being, a touch light, the market reaction was actually pretty positive, optimistic even.
Right. So why the optimism if EPS missed?
Well, it really came down to the stuff underneath the EPS number. Really strong free cash flow generation, very impressive order entry figures, and crucially, they reaffirmed their full year guidance.
Yeah.
So investors were basically looking past the immediate bottom line and saying, okay, the core operations look healthy, the future guidance is solid.
Gotcha. Let's unpack that operational strength then. The order entry, you mentioned that, up 10% year over year.
Yeah, highest it's been in 3 years, actually. Pushed their product backlog up near $1 billion, around $980 million.
Wow. And the free cash flow story, that seems like the big one.
Oh, absolutely. For the first time ever in the company's history, they had positive free cash flow for the entire first half of the year.
Not just the quarter, the whole half.
The whole first half. And Q2 itself was the third straight quarter of positive free cash flow, $12.6 million this time. For a company like Diebold Nixdorf, that's a massive shift.
That really is significant. Changes the narrative a bit.
It genuinely does. I mean, historically, This was a company that often consumed cash, especially seasonally. So seeing consistent positive free cash flow, it signals something fundamental has changed.
Better discipline? Leaner operations?
Both. Disciplined working capital management, definitely, but also just a better ability to generate cash from the core business. And you saw it in margins too. Gross margins ticked up sequentially, GAAP margins up 150 basis points, non-GAAP up 120.
So real operational improvements showing through.
Exactly. And that seemed to be the message from the top as well.
Yeah, the management tone, CEO Octavio Marquez, sounded pretty confident. He called Q2 another standout quarter.
Right, highlighting strong order entry across geographies.
And really hammering home the disciplined working capital and continuous improvement points.
He even said the business is trending toward the higher end of our full year outlook for the key metrics: revenue, adjusted EBITDA, free cash flow.
That's sticking your neck out a bit mid-year.
It is. But I think that confidence, that doing what we say message, as they put it, that's really hitting home with investors. They're seeing the follow-through after years of transformation talk.
Credibility matters.
Absolutely. It shows they're moving from maybe being a bit unpredictable cash-wise to being a more streamlined cash-generative operation.
Okay, so let's look at that full-year guidance they reaffirmed. Revenue flat to low single digits up. Adjusted EBITDA between $470 and $490 million.
Yep.
And free cash flow, $190 to $210 million. That's over 40% conversion from EBITDA.
Which is strong. Very strong conversion.
But a lot of it, 54% of the revenue, is weighted towards the second half, with Q3 being a big chunk of that.
Yeah, that's right. About 45% of the second half revenue expected just in Q3. So a definite back-end load.
So what gives them the confidence for such a strong finish to the year?
Well, it seems to be a mix of things firing on multiple cylinders. You've got specific strategic initiatives in both banking and retail that they expect to gain momentum. And underpinning all of that is this relentless focus on operational efficiency we talked about. They really seem to believe those gains are sustainable and scalable.
Right, let's break down those initiatives. Banking first. They mentioned strong wins globally, especially APMEA.
Yeah, Asia Pacific, Middle East, Africa. Seems like good demand there for their newer DN series ATMs and the services around them.
And they talked about some specific tech, like dual power ATMs in the Middle East.
Right, and QMB deploying this high-capacity DN series 500. They called it a branch in a box.
Branch in a box. What does that mean practically?
Well, it can apparently print debit cards on the spot, handle high-value deposits withdrawals, much more than just a standard cash machine.
Okay, that's a step up. And interactive tellers in Kuwait, too.
Yep, with Kuwait International Bank. So innovation happening on different fronts in that region.
Interesting.
And it ties into this broader idea they have of the complete cash ecosystem. It's not just ATMs in isolation.
You mean linking it all together?
Exactly. Their progress with teller cash recyclers, TCRs, it's part of automating the whole branch, ATMs, teller lines, the vault, making it all work together efficiently.
And they think there's still a way to go on TCR adoption, like third or fourth inning.
That's what they said. Suggests a lot more room for growth there. And importantly, they're now making those TCRs in Ohio for North America.
Ah, local manufacturing.
Yeah, which is the biggest market for TCR. So bringing production closer makes a lot of sense.
Okay, switching gears to retail, what's the story there? AI seems to be a big focus.
Definitely. Their Vynamic Smart Vision AI, it's designed for things retailers really care about, cutting down on shrink, verifying age for restricted products, even recognizing produce at checkout.
And it won an award in France.
It did, yeah. LSA Tech AI for Business Award. Good validation.
More importantly, is anyone actually using it yet?
They mentioned their first live customer in the U.S., a mid-sized grocery chain, rolling it out in 18 stores. So it's moving from pilot to deployment.
That's key. Real-world application.
Absolutely. And it's a smart play because AI solutions like this offer a clear ROI for retailers struggling with losses. It's a direct answer to a major pain point.
And the manufacturing strategy applies here too, local for local.
Yeah, they're expanding retail manufacturing in Ohio as well, starting with self-ordering kiosks, planning to add self-checkout lines.
So less reliance on overseas production, fewer tariff headaches for North American customers.
Exactly. Builds up their U.S. manufacturing footprint and makes their supply chain more resilient for that market.
And beyond the specific products, this theme of operational excellence keeps coming up.
It really does. It feels like the foundation for a lot of the improvements, especially the margin expansion. You're using lean principles, continuous improvement. It sounds like it's embedded now.
Examples.
They mentioned consolidating repair centers, like in Poland, rolling out new software for their field technicians to make them more efficient, adding technicians where needed.
And that new operations center in Ohio.
Right, that's now live. Centralizing dispatch, training, parts logistics for all of North America. The goal is better customer satisfaction, faster response times, the nuts and bolts of running a service business well.
Makes sense. Sounds like a lot of internal plumbing getting upgraded.
Pretty much. And they're not stopping there. They've also kicked off plans to cut operating expenses by another $50 million annually. Expect to see the first steps on that soon.
Wow. Okay, so cost cutting on top of efficiency gains.
Seems like it. And on the capital side, they bought back $30 million in shares in Q2.
Part of a bigger buyback plan.
Yeah, a $100 million authorization. So it shows confidence in their own stock value, commitment to returning cash to shareholders.
All while keeping, what did they call it, a fortress balance sheet.
Yeah. $620 million in liquidity. So they feel they have the financial strength to do the buybacks, invest in the business, and still be very solid.
Okay, so pulling it all together, what's the takeaway for someone watching Diebold Nixdorf? The stock's done well over the past year, right? Near its highs.
Yeah, definitely up significantly. And you can see why investors are feeling more positive. The confidence seems to be growing.
It's more than just this one quarter's numbers, though.
Oh, for sure. It's the accumulation. You had catalysts like getting added to the Russell Growth Indexes back in June that brings new eyes, new money.
Right.
You've got the validation for their AI tech, the positive buzz around expanding U.S. manufacturing, news about landing key contracts. It all builds a narrative.
And the overall industry trends are favorable. Banking automation, retail recovering.
Generally, yes. Demand for banking automation remains pretty strong globally. And the retail sector, while maybe facing some headwinds, is recovering and investing in tech. Diebold plays into both those trends, even with challenges like foreign exchange swings or tariffs out there.
So the execution seems to be overcoming some of those macro issues for now.
That's certainly how the market seems to be reading it this quarter. The focus is on their execution and cash generation.
All right, let's step back for our This Is Not Financial Advice segment. Beyond the standard analysis, where's a more, let's say, audacious take on Diebold Nixdorf?
Okay, yeah, this is where we get a bit creative.
Everyone sees the free cash flow, the AI in retail, fine. But I'm looking at something else bubbling under the surface.
Go on.
This hyper-localized banking automation push in emerging markets. It's not just selling standard ATMs, it's custom energy-efficient units for India. It's those branch-in-a-box machines in the Middle East, printing debit cards, doing video teller stuff.
Like tailoring the tech very specifically.
Exactly. This isn't just hardware sales. If they pull this off, they could become the essential infrastructure provider for banking systems in some of these fast-growing regions as they digitize. Like the only game in town. That's the potential alpha, I think.
Okay, interesting angle.
Yeah.
So how would you hypothetically, of course, play that very specific geographically focused thesis?
All right, here's the thought. A synthetic long straddle, but with a geographical twist. Not just on the company overall, but focused on this emerging market infrastructure play.
A synthetic long straddle. So long calls and long puts. How does the geography fit in?
Okay, so we buy out-of-the-money calls, maybe expiring late 2026. We're betting on a big upside move if this local-to-local strategy really takes off and they lock down market share in places like APAC, LATAM, the Middle East, where the growth is.
Right, capturing that specific upside narrative.
But at the same time, we buy out-of-the-money puts, same expiration. This is the hedge. It's specifically guarding against something going wrong in those exact regions.
Like geopolitical issues, sudden regulatory changes, supply chain disruptions hitting those specific local initiatives?
Precisely. Things that could derail that specific growth story, even if the rest of the business is okay. So it's not just a bet on Diebold Nixdorf's stock price direction. It's a bet on whether this specific narrative becoming the indispensable banking infrastructure in key emerging markets plays out.
While hedging the unique risks tied to that specific narrative?
Exactly. It's targeting a non-linear payout based on whether that very specific regional dominance story unfolds. It's niche, it's audacious, and it acknowledges the localized tail risks.
A very specific way to look at it, certainly beyond the standard quarterly analysis.
Just thinking outside the box. Anyway, let's wrap this up.
Okay, so summing up Q2 for Diebold Nixdorf. A strong quarter overall.
Yeah, highlighted by that record free cash flow, improving margins, and clear progress on their strategies in both banking and retail.
And that solid performance, plus the confident guidance, it definitely resonated with the market. You saw that in the reaction.
The focus seems to be on execution lean operations, local manufacturing, pushing forward with AI.
Right. Key things to watch going forward will be if they can sustain that cash flow conversion, how the retail segment continues to perform, especially with AI scaling up, and just general execution against that back half loaded guidance.
As always, this is just our take. We encourage you to do your own homework, dig into the details yourself.
Absolutely.
Thanks for tuning into the deep dive. Let us know what stood out to you from Diebold Nixdorf's quarter. We're always interested in your feedback.